Welcome to the CondoVultures.com podcast with your host, Peter Zalewski, a Miami real estate broker, Wall Street consultant, and expert witness. This podcast is focused on identifying real estate buying opportunities in the South Florida condo market of Miami-Dade, Broward, and Palm Beach counties. The CondoVultures.com podcast is not authorized by the South Florida real estate industry and will most likely annoy many of the region's talking heads. This podcast will feature straight talk and salty language that could be offensive to some. Please remember that past investment success does not determine future gains, especially in South Florida's volatile condo market. For more information, please visit CondoVultures.com.
Welcome to the Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski. I have a company called Condo Vultures. We are a consulting firm, as well as we also offer brokerage services, primarily on the buy side, and we're driven by data. Thanks for tuning into this podcast. What we're going to be taking a look at with this particular podcast is the condo market. It's a look at where we focus on a particular submarket or market in the Tri-County, South Florida area, give you an idea as to what's going on in that particular market from a statistical perspective. For this particular podcast, we're going to be taking a look at greater downtown Miami. And anybody who sort of is familiar with the area, let me give you the boundaries. We're going to have the Biscayne Bay to the east. We will go west to Interstate 95. We'll then go from the Julia Tuttle Causeway, which is expected like 36th Street. We're going to go south into the Rickenbacker Causeway, which is somewhere in the ballpark of about 24th Street or so to the south. So that particular area, which is a high concentration of condominiums, we're going to give you some perspective as to what's going on in this marketplace. Keep in mind, greater downtown Miami really is sort of the market that drives condo pricing throughout the area. Why is that? Simply because of the density. Now, from a pricing perspective, South Beach, and especially south of 5th neighborhood, is going to be very dominant, but that will set pricing for the entire overall state of Florida versus greater downtown Miami, which will give you a really good idea and a reflection of what's going on in the marketplace. Now, a couple things to keep in mind before we begin this podcast, just so I simply don't have to repeat them over and over and over during our podcast. Point number one, all of our data, all our statistics can be coming from the multiple listing service. Multiple listing service is a database in which people who have a real estate license join a club. That club is called the Realtor Association. And in return for joining the club, the fee is somewhere about $1,000 or so a year. For joining that club, what you get access to is the multiple listing service. It is a database that real estate people use in order to market properties for sale and or to identify properties for sale. The one common denominator or requirement for the multiple listing service is that a commission has to be offered. So what does that mean? That means a commission is offered if you find a property in the multiple listing service. And that also means you're not going to find certain properties that are listed in the multiple listing service because nobody wants to pay a commission. What would be an example of that? One example would be a for sale by owner. Any sign that's for sale by owner, that's not going to be in the multiple listing service. Why? Because no commission is paid. Another example on the rental side is when you see a 300 unit building with rentals with big sign on the outside that says for rent and lists a telephone number, as well as possibly a guy standing in front, flipping a sign, trying to get your attention as you drive by. So you pull over, go in and get some information. That's also not going to be included in the multiple listing service. So multiple listing service is a perspective. It doesn't include and incorporate all properties on the marketplace, but is a quick, easy way to sort of get a gander as to what's going on. Another point to keep in mind about these particular podcasts, we're going to be looking at transactions based on the first 3 quarters of 2022, first 3 quarters of 2022. That'll be January through September. And as a result of that, it is not going to be the final data. Final data for the year of 2022 will be releasing in February. Why are we doing it a month after the fact that the year ended? Simply because some brokerages who enter information into the multiple listing service, they take a little bit of time. There's a little bit of lag time. Sometimes there's catch up. And because of that, we want to try to be as complete as possible. So beginning in February, we'll go ahead and release the 2022 numbers. Another thing to keep in mind, all of these statistics that are in this multiple listing service, they're all going to be put in by people who have real estate licenses. So does that mean they're accurate and they're complete? No, not at all. There's been plenty of cases where information has been put in there that hasn't necessarily been correct. So keep that in mind as you're looking at the statistics. There is human error involved. If you want to get a best idea as to what a property is really trading for, you're going to need to go to government records where you can actually pull deeds if it is a transaction. And their taxes are paid based on the transaction amount. So that's a way to track sales. In terms of rentals, there is no way to track rental information. It's all simply what is put into the mobile listing service. And why is that? Because there's no document that's filed with the government and any taxes are paid on it. And therefore, you're not going to be able to track the rental side. So we talked about the multiple listing service. We talked about how this, all of the statistics are going to go for the first 3 quarters of the year. A couple of tidbits to keep in mind. If you're listening to this podcast on a traditional podcast platform, and you want to see and refer to some of the statistics that I'm going to be discussing in a particular podcast, look in the notes of this podcast description. I will include the links. So you can go ahead and pull up each and all of the charts. If you don't want to screw around with each particular link, simply go to condovulturesrealty.com, condovulturesrealty.com. There under market intelligence, you're going to see all the charts that I'm referring to. And I will also tell you, if you would rather watch this particular video and see the charts as I'm discussing them, simply go to a platform such as Spotify, which allows for video podcasts to occur. Another way to do it is simply go to YouTube. This particular podcast the video of it is going to be uploaded to YouTube. Finally, before we wrap this up, when we move on to our first segment, like Greater Downtown Miami, let me remind you, if you have any questions or comments, please send an email to inquiry@condovultures.com. That's INQUIRY@condovultures.com. So that being said, we'll go ahead. We'll take our first commercial break. When we come back, we're going to get into the condo market in Greater Downtown Miami.
It's a simple formula, and it works. Buy low, sell high. We're Condo Vultures, and when it comes to your real estate, we help you buy low. At Condo Vultures, we represent the buyer, and now's the time to buy. Log on to condovultures.com for more information. condovultures.com. And remember, before you sell high, you have to buy low. Featured in the New York Times, Wall Street Journal, 60 Minutes, and Time Magazine. Condo Vultures Realty, a licensed Florida real estate brokerage capitalizing on the condo correction since 2006.
Welcome back to the Miami Real Estate Investing Podcast. I'm Peter Zalewski, your host. I have a company called Condo Vultures. For this particular segment of the podcast, we're going to go ahead and we're going to focus on the overall condo market. And this will simply be the units that are located between the Julia Tuttle Causeway to the north, going south to the Rickenbacker Causeway. It'll be Biscayne Bay to the east, going west to Interstate 95. Greater Downtown Miami is always a great way to sort of assess what's going on in the condo market. Why? Simply because of the density, the amount of activity, the volume that occurs here. It gives you a real good sense and sentiment as to what the overall buyer pool is. Now, while pricing is primarily driven by the South Beach market, which has the sand that's on a barrier island and it has a notoriety, it primarily tracks pricing versus downtown Miami, which is on the mainland, but across about a 5-mile causeway from South Beach. That's going to give you the velocity. It'll give you an idea of kind of where the market's heading. So let's get into the condo numbers. 1,550 condos are for sale in Greater Downtown Miami, 1,550. The average asking price, $1.3 million a door, $1.3 million a door. And what does that work out to price per square foot? About $821 a foot, $821 a foot. Now, I want to point out to you, when you're looking at condos, I want you to think commodity. I want you to think gasoline. I want you to think coffee. I want you to think orange juice, pork bellies, any and all in between. And when you think about condos, you should think commodities. Why? Simply because most of the units are pretty typical. If you're in a particular building, the only thing that will differ from unit to unit to unit based on a particular line, say an O1 line, an O2 line, an O3 line, is simply what floor you're on. Generally speaking, as you go up or down in a building based on a line, again, O1 line, O2 line, O3 line, the only thing that differs is that particular, the view in terms of the height. So we typically see somewhere in the vicinity of $5 to $10 grand per floor as you go up and as you go down. So think commodity when it comes to condos, other than maybe the penthouses and maybe some of the townhouses that were typically built on parking garages, which are the first 8 stories of a building. Most of these condos are all pretty much going to be the same. You don't really need to even go and visit the condos because they're all the same. Now, some owners or sellers will turn around and upgrade their units, but many times the upgrades don't necessarily result in any kind of major premium being paid. Now, contrast that with a single family house. Single family house is more of a work of art. And what I mean by that is the land layout, where it's located in a particular community or on a street. All that's going to impact a particular house, as well as how many stories is the house? What type of interior is on the house? What is the shape of the house? What's the efficiency of the house? Is there a swimming pool? Is there not? Is there a shed? Is there trees? So when you think house, think work of art, and therefore everything is unique. When you think condo, think commodity. And that's why it's important when you're looking at condos, don't focus on price per door or price per unit, focus on price per square foot. The same way you pull up to an intersection, you see 3 or 4 different gas stations at an intersection. You decide which gas you're going to buy based on the price per gallon. That's how I want you to take a look at condos. So $821 a square foot is what's currently being sought or asked. In those condos that are on the market, they've been there an average of 149 days and counting. 149 and counting, keeping in mind 30 days in a month. Now, in terms of pending, these are all the deals that are under contract and the closing is in the process. So they say 158 pending condos in Greater Downtown Miami. The average asking price of those pending condos when they were on the market and they went pending, $814,500 per door, $814,500 per door. On a price per square foot basis, $660 a foot, $660 a foot. In days on market, these pendings have been there 104 days. And then finally, closed sales, January through September of 2022. We had 3,375 condos trade in Greater Downtown Miami in the first 3 quarters of the year. They traded at an average of $767,600 per door, $767,600, and the price per square foot, $613 a foot, $613 a foot, and they traded an average of 79 days. Now, keep in mind, it's very interesting there. The units that were appropriately priced, they traded in 79 days. The condos that are on the market today in Greater Downtown Miami, they've been there an average of 149 days. So you can see that this increased pricing or high pricing is causing some of these units to sit on the market longer and languish on the market longer. Now, let's take a look at what the differences between what the average asking price is and what the average transaction price. Keeping in mind, generally speaking, when the difference between the asking price and the typical average of a particular building gets to about 20%, you see some activity. Typically, you will see a deal start to be consummated or completed once that difference between the ask and the average transaction price gets to about 8 to 12, maybe 15%. So the average asking price today per condo Greater Downtown Miami, it's about a 70% spread price per door, 70% spread price per door. Remember, the ask was $1.3 million and the average transaction price, $767,600. So big difference there. Now, what is it price per square foot? On a price per square foot basis, 34% difference, higher than you would like to see in order to get some activity, but still a little bit more reasonable than what you're seeing price per door. $821 a foot was what's being asked in Greater Downtown Miami for a condo versus the average transaction price, $613 a foot. Now let's talk about how many condos traded per month in the first 9 months of the year in Greater Downtown Miami. 375 condos. So that is the velocity. That is the sales pace, 375 a month. If I take that 375 a month, I divide what's currently on the market, which you might call is 1,550. And what I'm going to call up with is 4.1 months of supply, 4.1 months of supply. Now, when you're looking at months of supply, keep in mind equilibrium is typically expected or assumed to be about 6 months of supply. Anything less than 6 months indicates a seller's market. Simply, there's not enough to choose from. Anything greater than 6 months indicates it is a buyer's market. So looking at Greater Downtown Miami's condo market right now, it is a seller's market. It's a seller's market Greater Downtown Miami. And why is that? Simply, there's not enough inventory up on the market for a variety of different reasons. One may be the high interest rates. Another one, high interest rates today, but low interest rates when some of these people maybe purchased them. The other reason may be that some of the units were listed on the market, never actually transacted, and the realtors are trying to get the sellers to cut price, and yet these sellers don't want to cut price. Why? Because we're getting close to the peak of the winter buying season, which is really when everybody descends on South Florida because it's cold up north, and we have beautiful weather down here in the South Florida area. So we'll go ahead. We'll take a short commercial break. Other side of the break, we're going to get into the luxury condo market in Greater Downtown Miami.
This is Peter Zalewski of the Condo Vultures podcast. I hope you're enjoying the podcast. And I wanted to alert you that if you have a property that you're looking to sell in the Tri-County, South Florida area, I would encourage you to reach out to Jenny Cortez, a licensed real estate broker with cvrrealty.com. She's my partner. She's been in the business for north of 15 years. More importantly, she knows the market. She knows how to get a deal done. And she also realizes that it's more important to get a price that you can accept and sell the property rather than to hold firm on some price that's never going to be achieved and ultimately languish on the market. So if you're looking to do a deal that you want a skilled expert who can help you sell a property, reach out to Jenny Cortez at 305-865-5859, 305-865-5859, or visit her website, cvrrealty.com. shortsale.com.
Welcome back to the Miami Real Estate Investing Podcast. I'm Peter Zalewski of Condo Vultures. In this particular segment of our podcast, we're going to go ahead and get into the luxury condo market. Now, when you are in South Florida, you're looking to buy, you're looking to sell, you're going to hear that word luxury kicked around quite a bit. Why is that? Because realtors who are hired to sell product, they want to try to get the highest price possible. Why? Because their commission is based on the price achieved. Therefore, everybody refers to their particular property as luxurious. Doesn't matter if it's a shed with a knockdown notice on the front. Chances are somebody's going to refer to it as somehow luxurious property, luxurious location, luxurious neighborhood, luxurious countertops, whatever it is. For us, it's very difficult to sort of figure out what's luxurious, what's not. So we said, let's go ahead and let's use some sort of arbitrary line. And from that line, we'll go ahead and make a decision of types of properties be luxurious versus those that are not luxurious. Number we came up with is 1 million. So 7 figures. If a property is listed for $1 million or more, we're going to deem it luxurious. If a property is listed for $999,999, we will not deem it luxurious. We will call it common, if you will, or standard. So $1 million or more is luxury. $999,999 is not luxurious. So for this particular segment, we're going to talk luxury. Again, $1 million or more listing price. 531 condos are listed in greater downtown Miami with a minimum asking price of at least $1 million. The average price per door being sought by these sellers, $2.6 million a door, $2.6 million a door on a price per square foot basis, $1,081 a foot per square foot, $1,081 per square foot. And then finally, days on market, these luxury condos have been on the market an average of 170 days, 170 days. Now, in terms of pending sales, 29 condos are listed, luxury condos are listed as pending in greater downtown Miami with an average asking price when they went under contract of $2 million a door, $2 million a door, or $945 a foot, $945 per square foot. And they have been on the market and under contract for an average of 139 days. 139 days. And then finally, the transactions in the first 3 quarters of the year, remember January through September, we have 545 transactions of luxury condos greater downtown Miami, 545. The average transaction price, just under $1.9 million per door, $1.9 million per door. That comes out to an average of $873 a square foot, $873 a square foot. And finally, those units that did trade that were luxurious in greater downtown Miami, they traded in 111 days, 111 days. Again, the days on the market indicates whether or not an appropriate price unit will move, and those which are not appropriately priced, whether they languish on the market. And an example here is units that trade in the first 9 months of the year, they were said and done and out the door and closed in 111 days versus the luxury condos on the market today in greater downtown Miami. They're there 170 days and counting. Now, typically when you go under contract, you try to close, you're looking at 30 to 60 days on top of that. So you can see that the buyers are not moving as quickly as they had been in the first 9 months of the year on some of these properties. Why is that? Maybe it's fear about the economy. Maybe it's fear about the U.S. dollar being strong. Maybe it's fear about the interest rates, or maybe it's sort of the fact that the asking price is just way damn too high. Now, let's get into the differences between the average asking price and average transaction price for luxury condos greater downtown Miami. Right now, price per door, it's about a 39% spread, 39% spread. Again, 20% difference when you get action. Typically 8 to 12, 15% spread is when you get a deal done. So you can see price per door. There's a big spread between what sellers are seeking versus what the average transaction price is. What is that price per square foot? Comes out to about 24%. So that suggests that you're starting to see maybe some movement price per square foot where you could sort of see some activity on the luxury condo side. Now, in terms of average luxury condo transactions greater downtown Miami per month, just under 61 deals a month, 61 deals a month. If I take that 61 deals a month in luxury condos greater downtown Miami, I divide it what's currently on the market, which is 531. I'm going to come up with 8.9 months of supply, 8.9 months of supply. Remember, 6 months is equilibrium, 6 months of supply. So anything less than 6 months means it's a seller's market. Anything more than 6 months means it's a buyer's market. So this, defined by the traditional 6-month period, is going to suggest that this is a buyer's market for luxury condos in greater downtown Miami. However, many of our luxury brokers, they say, well, people playing in the luxury game of $1 million or more, they have more money than God. Therefore, they don't need to sell right away. They don't need the cash. Therefore, they can sit around and they can wait longer. So what we typically find in a situation like that is that these luxury brokers will turn around and they will simply say that 12 months is more of an equilibrium, or possibly even 18 months is what's necessary in order to move product. So I will tell you, if you go by the traditional way, the luxury condo market in greater downtown Miami is a buyer's market. However, if you adhere to what the luxury brokers say, and I don't, but that 12 to 18-month period, that would suggest that this is a seller's market for luxury condos in greater downtown Miami. We'll go ahead. We'll take a short break. The other side of the break, we're going to get into the distress market in greater downtown Miami.
This is Peter Zalewski of the Condo Vultures podcast. Before I started doing these podcasts, I was in the business of being a licensed real estate broker, a contributing columnist for the Miami Herald, as well as the Miami Real Deal, but also extra witness work in consulting. So if you are looking for an expert witness, or if you're looking for consulting services, a straight talk perspective as to what's going on in a particular marketplace, a building, or what happened previously, for whatever your situation is, whether you are an attorney, whether you are an institutional fund looking to invest, or whether you're a lender who's trying to come up with some sort of strategy and approach for your lending committee going forward, I just might be able to help you. To get a hold of me, please reach out to peter@condovultures.com. That's peter@condovultures.com, or give me a call to the office at 305-865-5859, 305-865-5859.
Welcome back to the Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski of Condo Vultures. So for this particular segment, we're going to talk about the distress market of condos in the greater downtown Miami area. Now, before we get into that, let me sort of lay out the rules of engagement in terms of what is distress. There's two forms of distress type of product that you, a buyer, can sort of take a run at and get your hands on. Point number one is called a short sale. Short sale. Now, what is a short sale? Basically, a seller is coming up short of what's owed on the loan and wants to try to unload the property and get the bank to play along and take a haircut or a discount and not be repaid in its entirety. Now, why would a bank do this? Ultimately, to avoid the foreclosure process, which can take anywhere from 9 to 12 months, maybe longer, depending on the representation the borrower and seller might have. Not all banks necessarily want to do it, but it is a way sometimes to make a problem go away and not have to go through a foreclosure process. Now, the foreclosure process product, those properties where a seller and a borrower is not able to repay the loan, has found themselves in some trouble, and ultimately is going to get foreclosed. That property, when it comes out of the other side after the court process and all the expenses that are associated with that, that comes out as a real estate owned or an REO or a bank owned. So when anybody refers to REO, real estate owned or bank owned, it's all virtually the same. Same thing as a foreclosure. So after the foreclosure process, the bank gets the deed, and then the bank has the ability to go ahead and sell the product. And once it sells the product, then it's going to, whatever money it collects will go towards repaying what that particular borrower owes. And typically a bank, if they come up short and getting repaid everything that they're owed through a foreclosure process, they'll typically try to sue that particular borrower and try to get their money back. But I'm not an attorney. You got to ask your attorney or someone who is an attorney to give you more details about it. That's basically just a real simple way to do it. So what we're going to do is we'll look at short sales first, and then we're going to get into the REOs, real estate owned or bank owned. Again, all one and the same. Now, generally speaking, in terms of distress for condos in greater downtown Miami, there are 4 units that are currently on the market, 4 units currently on the market. You got 1 pending sale, and you had 19 transactions the first 9 months of the year. 19 transactions. If I just take a look at it very quickly, I'm coming over to about 2.1 distressed condos moving per month in the first 9 months of the year. If I take that 2.1 units that move monthly in distress in greater downtown Miami condo market, right into the 19 that are currently available, I'm going to come up with about 1.9 months of supply, 1.9 months of supply. So that is a seller's market, which should not be a surprise to you. The lenders, especially on REO, they have the ability to decide what product they're going to go ahead and put on the market, and they can list it when and if they see fit. And they've already taken their haircut on a loss on a foreclosure. Therefore, no lender who's going to try to get the highest possible price is going to flood the market with REOs or bank owns or real estate owned. So keep that in mind. Now let's get into short sales. Currently, there's only 1 short sale available in greater downtown Miami condo market. The ask price is $1 million, $1 million. And the average price per square foot, $685 a foot, $685 a foot. It's been on the market 53 days. There's currently no pending sales of short sales, no pending sales of short sales in greater downtown Miami. And then finally, in the first 9 months of the year, 7 short sales traded at an average price $350,300 per door, 350,300 per door. That worked out to an average of $349 a foot, $349 a foot. Now, keep in mind what we talked about earlier. We're talking north of $600 a foot on average for a condo in Greater Downtown Miami. These 7 short sales that traded first time once a year, they move for $349 a foot. So you can see there's a real reason why people want to chase after the distress. And then finally, the distressed properties that did trade, they were on the market and pending and closed within 77 days, 77 days. Now, what's the difference in the one asking price, that one unit that's for sale or the short sale, and the average transaction price? About 186% difference, 186% difference. Again, 20% difference typically when you start to see something. But what catches my attention about the price per door difference is that we're talking about $1 million condo where somebody's coming up short and they're going to need to try to unload it because they're trying to avoid a foreclosure. So think about that. 7 figures and somebody wants to dump it at a loss, not only for the borrower, but also for the bank. On a price per square foot basis, about a 96% difference, 96% difference. Average asking price, $685 a foot on the active short sale for sale, and the average transaction price, $349 a foot. And then again, that day's in the market. That one short sale is on the market right now, 53 days versus those that traded 77 days, 77 days. Now, how many short sales traded on average per month in Greater Downtown Miami in the first 9 months of the year? 0.8 units per month, 0.8 units. So if I take that 0.8 unit velocity divided on the 1 units on the market today, I'm going to come up with 1.3 months of supply, 1.3 months of supply. So the short sale market, based on 6 months being equilibrium, short sale market is a seller's market in Greater Downtown Miami. Now let's switch over to the REO, the real estate owned, the bank owned, the foreclosure. These are the units that basically people have stopped paying. The bank has moved to foreclose, ultimately gone through the 9 to 12 month foreclosure process, paid the fees, and now the bank's trying to unload the units. 3 REO properties are currently in the market in Greater Downtown Miami today. Average ask price, $1.1 million a door, $1.1 million per door, an average of $704 a foot, $704 a foot. And they've been on the market 79 days, 79 days. Again, north of $1 million bank owned. So what does that suggest to you? Maybe some of these people have more money than God. Maybe they don't really have it. Pending sales, one pending sale, which is an REO in Greater Downtown Miami. Its asking price when it went under contract, $415,000 or $416 a foot, $416 a foot. And it's been on the market and pending for 68 days, 68 days. And then finally transactions. We had 12 REO condos traded Greater Downtown Miami the first 9 months of the year. They traded for an average of $921,350, 921,350. Price per square foot, $547 a foot, $547 a foot in Greater Downtown Miami REO condos. And they were on the market a grand total of 42 days. They went on the market, they went under contract, they closed in only 42 days. Again, 42 days is how long it took them to close them. Those that are on the market today, they've been there 79 days. So that suggests, again, pricing's probably out of whack. Now, what is the pricing difference? Well, the average asking price, again, was 1.1, and the average transaction price is 921,350. That's about a 16% spread, 16% spread. Remember, I told you 20% it gets interesting, 8 to 12, 8 to 15% difference when you get a deal done. So these condos that are on the market today, they are priced on a price per door basis. They're priced to move. Now, what is the price per square foot? Which again, is much more critical than price per door. We're looking at 29% spread, 29% spread. So you can see still inflated by a good 15, 20% or so. And then finally, REOs that traded per month, the velocity in Greater Downtown Miami, 1.3 units traded per month, 1.3 units traded per month. Take that 1.3, I divide it into 3 units that are on the market today. I'm going to come up with 2.3 months of supply of REO condos in Greater Downtown Miami. So we'll go ahead. We'll take a commercial break. Other side of the break, we're going to get into the rental market.
Don't buy a South Florida condo, discounted or distressed, before taking a Condo Vultures correction tour. CondoVultures.com offers weekly bus and walking tours that focus on educating buyers on the how-tos of identifying discounted condos, analyzing the opportunities, and purchasing units. Every tour attendee receives a list of all condo projects in a particular market, a market assessment handout, and unmatched expert analysis. For more information on the condo correction tours, please visit condovultures.eventbrite.com.
Welcome back to the Miami Real Estate Investing Podcast. I'm your host, Peter Zalewski of Condo Vultures. We talked about condos, we talked about luxury condos, we talked about the stressed condos. Now let's talk about the rental market. Now, if you're listening to this podcast or you're watching this podcast, again, you can see it on Spotify, you can see it on YouTube or anywhere that you see video podcasts. If you're listening, chances are you're probably looking to buy a condo, whether it's going to be a second home, it's going to be primary residence, it's going to be a vacation, whatever the case may be. Keep in mind, it's important to understand what the rental market is in order to give yourself some sort of hedge in case things change. Things change for a variety of different reasons. Maybe there's job change, maybe there's health issues, maybe there's a situation with your status in terms of your family. So sometimes, some buyers will go in, they'll purchase a property, and then lo and behold, they end up having to rent the property. So it's always critical to have an idea what's going on in the rental market. So that's what we're going to talk about this particular segment. Now, I will tell you that when we're talking about rentals, as mentioned or at the beginning of the podcast, rental data is going to be sketchy, and we're going to rely on median rather than average, which is what we did in the first or the other three other segments that dealt with condos, luxury condos, and distressed. So the reason we deal with median, once again, is that rental properties that are put in the multiple listing service where the realtors list the properties and commissions are offered, they can be rented daily, they can be rented weekly, monthly, annually. And rather than trying to carve out and get together a data set where everything is apples to apples, meaning they're all leased annually, they're all leased weekly, they're all leased daily, what we're simply doing is taking a look at the median number, which would be a number right in the middle. So it's not a great number, but no numbers in the rental market are going to be good. And why is that? Because many landlords don't want to pay a commission. The rents are already what they are. The landlords want to put their money in their pocket, especially those landlords who own 300-400 unit complexes. Just imagine paying a commission, which is 10% gross, 10% of the gross annual rent. Imagine paying 10% on 300 individual units. So typically what will happen with many of these large owners, which are typically called real estate investment trusts, they'll simply hire a person or two. They'll pay them 50 grand, 35 grand, whatever the case may be. They'll put them in a leasing office and they'll have them lease out all the properties, because the amount of money spent there rather than dealing with realtors is simply going to be much greater returns for the particular landlord. So keep in mind, again, most rentals are not going to be included in the multiple listing service, especially in Greater Downtown Miami. If you walk around or drive around Greater Downtown Miami, if you ride the Metro Mover, the trolley, you're going to see all of these rental towers with telephone numbers on the sides of them. For rent, come check it out. We'll lease the space to you. All of those are primarily corporate owned and therefore not going to be in the MLS. So this, again, just a sample of possibly what could be going on, but not the real number from the rental market. But still, it gives you some sort of room to maneuver. So what do we got going on in the rental market? And keep in mind, these rentals, they're going to consist of apartments, condos, efficiencies, multifamilies, and townhouses. So it's basically everything except single family houses. That's what we took a look at for Greater Downtown Miami. 1,539 rentals are currently listed in the MLS for Greater Downtown Miami. Median ask $4,350 a month, 4,350. What does that work out price per square foot basis? $4.42 a square foot per month, $4.42 a square foot per month. And those properties that have been in the market, they've been there on a median basis 43 days, and they haven't gone under contract yet. Now the units that have gone under contract, 454 are pending. The median ask when these units went under contract, $3,775 a month, $3,775 per month. Price per square foot is $3.79 per square foot monthly, $3.79 per square foot monthly. And those that are pending took them 29 days in order to be listed, go pending, and they have not yet transacted or been leases completed. Now, first 9 months of the year, how many leases were completed? 5,538, 5,538 median rental price monthly, $3,700. That works out to $4.03 a square foot, $4.03 a square foot per month. And it finally took 25 days. Keep in mind, 25 days for those that rented first 9 months of the year versus right now, the median days on the market for those that are available, 43. So you see there's a disconnect occurring. Now, what is that disconnect in terms of pricing? Well, on a price per month basis, we're looking at about an 18% spread. And again, 20% is what we see as the time where possibly renters and landlords are going to somehow get together, but typically 8 to 12, 18, 15% when the deal actually gets done. You can see that these places are priced in order to rent sooner rather than later. Now, on a price per square foot basis monthly, it's only 9.7% or roughly 10% difference. So price per square foot monthly, these places are priced to rent. And even though they're not renting and the days on the market is going up, that suggests to me that some of these sellers are probably going to have to tinker with their pricing, especially given the fact we're coming to the peak of the winter tourism season. Some of these landlords are going to probably have a moment where they come to the realization that they're simply asking too much and they're going to have to discount in order to get these places filled. Now, how many places rented per month on average in the first 9 months of the year in Greater Downtown Miami? 615. If I take that 615 velocity or rental pace, I divide what's currently available, which is 1539. I'm going to come up with 2.5 months of supply. Again, 6 months is equilibrium. So based on 6 months being equilibrium, anything greater than 6 months is a buyer's or a renter's market. Anything less is a seller's or a landlord market. So 2.5 months of supply suggests that the Greater Downtown Miami rental market is a landlord's market in terms of supply numbers. However, the pricing that's being sought versus what the median transaction price is and the days on the market suggest that this rental market is turning. Don't be surprised as we go deep into 2023, you start to see landlords pulling back on the prices that they're seeking in order to put tenants in their particular units, because every month that goes by, holding out for a high price, but every month that goes by with a vacant unit, that's ultimately going to impact any kind of returns that the landlord had planned or had hoped for that particular investment that they made. So that is an overview of the Greater Downtown Miami condo market as of the first 3 quarters of 2022. I will tell you that we do these podcasts weekly. Again, if you want to watch them and not simply listen to them, go to any kind of platform that permits or allows or provides for video, such as Spotify. You can also go to YouTube. Our handle is Condo Vultures TV. If you're looking for the charts, the data that I'm referring to, simply go to the description of this particular podcast or go to condovulturesrealty.com, click on the market intelligence prep. And when you do that, you're going to be able to pull up all of the charts that we have. And again, if you have any questions for us, any comments, please send an email to inquiry@condovultures.com, inquiry@condovultures.com. Thanks for tuning in. I'm Peter Zalewski of Condo Vultures. I hope to catch up with you again very soon. Until then, take care of yourself. Ciao, ciao.